Great. Good morning and Happy New Year 2025. Welcome to the very first edition of the World Bank online morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am the Senior External Affairs Officer of the World Bank based in Tokyo. We organize these online morning seminars to introduce the latest report presented by the authors of the report produced by the World Bank Group. The very first session of the 2025, we are going to feature the new report titled Services in Unbound, the Digital Technology and Policy Reform in East Asia and the Pacific. We have a special honor to have the Alessandro Barattieri, who is a senior economist in the office of the chief economist for East Asia and the Pacific of the World Bank, who actually is the main author of this report, Services Unbound. So next 35 minutes or so, we are going to listen to Alessandro presenting the main point of the report. Following his presentation, I'll read the questions that we received from the audience in advance. If you did not have opportunities to send your questions to us, please send your questions even during the presentation using the online form posted on the announcement page of this seminar, or you can simply put your question in the chat section of the YouTube screen, or you can even send a question directly to me by email. So I'll read your question on your behalf and then ask the Alejandro to respond during the Q&A sessions. So with that, I would like to formally invite Alessandro Barattieri, who is a senior economist in the office of the chief economist for East Asia Pacific of the World Bank and the main author of the Services Unbound, Digital Technology and Policy Reform in East Asia and Pacific. Alessandro, please come in. Thank you very much.
Thank you very much, Koiki. Do you hear me well? Do you see my presentation? Very good.
Yes.
So thank you for the invitation. I'm very, very glad to be here, although virtually. I hope I could be in beautiful Tokyo. And let me start by saying a slight imprecision, meaning that this was really a collaborative effort by many, many people in my team. So I just had the honor of leading the report together with our chief economist, Aditya Matu. But then let me say from the start that all the members of the team in the chief economist office, so Omar Arias, Jonathan Timis, Zong Li, Daisuke Fukuzawa, Ergis Ismailai, and then also some people from the region, Anna Chum and Sebastian Eckert, really, really gave a big, big contribution to this report. So let's jump in, and let's jump in a motivation why this report, which was originally featured as a special focus of the East Asia and Pacific Economic Update. So let me give you 7 facts about services in the AP region. In fact, let me give you a rainbow of them. So the first fact is that the share of services in both value added and employment increased significantly in the last few years. And we'll go back to each of these facts in a second. The second is that services are now key contributor to aggregate productivity growth. The third is that on the trade side, international side, export and FDI in services have grown much faster than in manufacturing in the last decade in the region. The fourth is that expenditure on services increases with the income level, which can tell us how predicted future increase in demand for these activities can be expected if hopefully this country's income will grow in the future. Fifth, services are more skilled intensive than manufacturing. Sixth, they are less carbon intensive than manufacturing with the except of transport. Lastly, but not least, of course, the female employment ratio increased with development faster in services than in manufacturing. And let me show you a little bit of data. So again, going back to the first fact, the increase in the share of services, both in value added and in employment in the AP region, you see from 2010 to 2021, now more than half of the activity, both in terms of value added and employment in China and the other countries of the region is represented by services. When we talk about aggregate productivity growth and how important services are, look at the purple bars. The purple bars are the share of contribution of services in the labor productivity growth of different countries in the region. and for different period of time. So I put some bars in the most recent ones, and you can see that from China to Indonesia to Malaysia, Philippines, Thailand, the purple bar are always bigger than all the others, meaning that services are actually the largest contributors to aggregate productivity growth. If we look at both export imports and foreign direct investment, you see, let's focus for the sake of time on the foreign direct investment on the right, that the growth rate of foreign direct investment inflow in services, the yellow bar, is much higher than what manufacturing has experienced in the last decade. And then the expenditure on services that increases with the level of income. Here we have a micro level evidence for two of the countries of the region, the Philippines and Indonesia. And basically the idea is what is the share of the total expenditure of households in several services such as health, education, transport, communication, insurance, as their income increase. So from the first 20% of the distribution of income to the most rich part of the population. And as you can see, all of these bars are rising, are increasing, which means that households whose income is higher spend more on services. And so as we think of the region as growing over time, we also think that the share of expenditure in services will be growing over time. Services are more skill intensive. If we look at the left-hand chart, you see how the education level for services, this is the case of Vietnam, but also many other countries in the region, is much higher than it is in agriculture or in mining. This is not surprising. And if we look at the intensity of emission, both direct and indirect through income, through input-output linkages, this is for China, but also we have data for other countries. You see how much the emissions in agriculture and industries are higher than the one in distribution, hospitality, communication, finance, or business services. The last fact that I mentioned was the female employment ratios. So this is a little bit of a difficult graph, but I think it's one of the coolest graphs in the report. So here for each country represented, from Cambodia, Indonesia, Philippines, Brazil, you see that by level of development, which is measured as the log GDP per capita, you see two straight lines. One straight line, the solid one, represent the gender employment ratio in services, and the ratio has a threshold value which is 1. So if anything on the vertical axis is above 1, it means that there are more female than male working in that sector in that particular level of development. If it's below 1, it's more male than women, females. And so as you can see, for different countries, we plot both services and manufacturing. And what you can see is that the solid line, with the exception perhaps only of Cambodia, is higher than the dashed line, which means that services have a higher ratio of female to male in employment, but also they are steeper than the dashed line. So the steeper means that with the level of development, the employment ratio of female to male workers increases with services more than it does in manufacturing. So for all of these facts, we find it's a very fascinating topic to study services in a region which, of course, in the past decades has been known for manufacturing and how manufacturing has promoted development. But we think also that the world is changing a lot. And so as the next step goes on, services are a very important topic. Let me give you now, for a couple of minutes, an organizing framework that should help you understanding also the sequence of the topics we treat in the report. So the report starts with the acknowledgement of the existence of two main drivers, which are on the one side, the technological development, specifically in the form of digital technologies, and the other side, the policy reform. So these are the two legs on which we'll conduct our work today, and we conduct our work in the report. Now, on one side, the combination of digital technologies and policy reform are actually creating changes in productivity, both in services, but also in the sectors which are inputs which use services as intermediate inputs. So agriculture and manufacturing becomes more productive because services become more productive. And this increase in productivity also is linked to an increase for the demand for skills. So on the one side, this technology and policy reform affect productivity. On the other side, they affect also the jobs and the skills that are needed. And through these channels, what we say is that this creates enhanced economic opportunities for these countries. At the same time, though, the powerful combination of digital technologies and partial policy reform also allows to improve access, for instance, to education, to health, we'll see also to finance. And this brings about an increase in the supply of skills to the economies, is what in a more less technical term, we called enhanced human capacities. And so is the combination and the powerful virtuous cycle between enhanced economic opportunities and enhanced human capacities that can actually give space and give a raise to higher growth and better jobs, which is what we all hope the region could enjoy in the future. So then if you see this scheme, you can understand how the report is actually written around three main questions. And the first question is, what is happening, which would essentially deal with the top part of this organizing framework. The second question is why it is important, which deals with the middle part of this organizing framework. And the last question is what needs to be done, which precisely has to do with the virtuous interplay between enhanced economic opportunities and enhanced human capacities, meaning what are the policies that our countries could implement to harness this virtuous cycle leading to better development. So again, what is happening? Why is it important? And what needs to be done? So let me start with what is happening. As we said, the two pillars are digital transformation and policy reform. So the digital economy is booming in the region. One of the many measures is offered to us by the Google Temasek and Bain report on digitalization. You can see that the rapid expansion of the size of the digital economy, which is now close to 5 to 7% of GDP in many of the countries of the region. And the second way of looking at this is the breadth at which funds in terms of venture capital is flowing into the region. Here I put the example for Thailand. As you can see, a very spread, diversified sectors base that are receiving funding from venture capitalists, which have a lot to do with services and digitalization, fintech, e-commerce, telecommunication. So this is certainly one aspect which is happening in the region, although we need to be always careful because the access still remain unequal. And this is unequal through geography, through income, through education. So access here we can measure in a very basic way as access to internet. And here you can see the difference between, for instance, the access in rural versus our urban area. And different countries have different divide. So, you know, certainly Philippines, Vietnam, and Mongolia have more serious issues on this front than, say, Malaysia or Thailand. But all of them witness a difference in the access to the internet. And more perhaps interestingly, also across education. Again, this for each country is a graph which tells you what is the access to internet for people with no education, with primary education, secondary or tertiary. Now, it's not surprising that these bars for each country are increasing, meaning that the more educated people have more access to internet. But you can see that in some countries, the slope of these bars is relatively flat. In other countries, pretty steep. So if you look at the smaller countries, Mongolia, Myanmar, no, you have a big difference between the access to internet of people with tertiary education and people with no education, which is of course a source of concern. So digitalization, but also unequal access. And second, the restriction to services trade that actually already started diminishing in the period from 2008 to 2016. We'll come to the more recent data. Let me explain you a little bit this chart. So essentially this chart proposes what is called the Service Trade Restrictiveness Index. Is an index that ranges from 0 to 100, where by 100 we mean the most restrictive regimes, and 0 is the most liberalized regime. So this is an index which is computed starting from many different questions on policies applied to different sectors. For instance, about foreign entry, or the existence of discriminatory licenses, or the difficulties in a certain procedure, or the competition within a given country in several service sectors. And this somehow is just an indicator which is summarizing all of these rich information for each country. You have the blue dot, which represents the level of restrictiveness in 2008, and the orange one that represents the level of restrictiveness in 2016. The fact that there is a decrease in many of these countries, you can see China, Thailand, for instance, Indonesia, means that effectively services became more liberalized already in the region, but we'll see this is still unfinished business. So the first question was what is happening, and the answer is there is digitalization on the one hand, there is unequal access, there is also partial policy reform. The second question is why do the digital technologies and the policy reform at the end matter? And so the first answer that we give is productivity, right? Here we have some more specific analysis where we go into the detail of firm level data to get a better sense of this phenomena with granular data. And so in the Philippines, for instance, what we found is that the adoption of digital technology boosted the productivity of service firms. In particular, we found both the adoption of digital technologies, as you can see on the left-hand chart, is higher in the services firms that is in manufacturing, that's the orange versus red line. And of course, within services is very heterogeneous, with professional services, for instance, adopting much more digital technologies than retail or wholesale. This adoption, furthermore, is much more pronounced in firms who are foreign-owned versus domestic-owned. I'm talking now about the center graph, and in those who have access to fiber broadband versus those who don't have access to broadband. But this adoption has consequences in that in the third chart that you see on the right, you see that there is a positive association between the higher level of usage of this digital technology and productivity, both when it is measured as the value added per worker and when it is measured as the total factor productivity that takes into account also of capital. So in the Philippines, we do find that the adoption of digital technology is positively associated with the productivity of the services firm. As for the impact of policy reforms on productivity, instead we move to a different country and we go to Vietnam. Oops. Where basically we found with a similar firm level analysis, two interesting results. The first is that removing barriers to entry and competition in the services sector increase labor productivity of the services firm. And here, this is called the direct effect. So how much the liberalization in services can actually impact the productivity of services firms. And we try to disentangle also this positive overall effect that we find. Headline result is that the liberalization in services that occurred between 2008 and 2016 increased average productivity in Vietnamese services firm by roughly 2.9% per year. And this overall effect, we can try to disentangle into which type of firms are benefiting the most. And as you can see, in terms of the direct effects, we see that both the state-owned enterprise, foreign firm, and small and medium-sized enterprises are actually benefiting from this productivity effect coming from service liberalization. But more interestingly, perhaps, what we find in Vietnam is that there is this cascade effect for which when services are liberalized, imagine finance, professional services, legal services, then also the manufacturing firms that utilizes these services experience an average productivity increase. And interestingly, this overall positive productivity increase that we find in the downstream manufacturing firms is mostly driven precisely by the private small and medium-sized enterprises, which obviously are always at the center of a lot of attention in our institution. So the idea that liberalizing services can help small and medium-sized enterprises to increase their productivity because they have access to better input in terms of finance, telecommunication, legal services, etc., is a powerful result that we found in the case of Vietnam. Because we don't like just to propose you statistical analysis, in this report, and we also provided you with some stories. In the report, we call them out of the box. We actually sat down with some interesting entrepreneur experts, and we asked them to help us give us a little bit of more texture behind these numbers. And in particular, we sat down with an interesting firm, whom you'll see in the report as you read it, which firm it is, which is a big software exporter from Vietnam. And it was very interesting to discuss with them. We asked them if they could give us a specific example of how they operate with the manufacturing customers. And what they answered is that many of our manufacturing clients need their processes migrated into the latest system. And now with the AI trend picking up steam, we are receiving requests to support manufacturing clients to implement their AI blueprint. The most important value added when it comes to serving manufacturing is the industry knowledge and the ability to assemble large teams of high quality engineers quickly. So now you realize the link that there is between this story and what we said before, because if you do not have a situation where, for instance, engineers can come in quickly from other countries, there's problem with visa, or the software companies cannot set up shop because there are restrictions to foreign direct investment, all of these things become more difficult. And so the possibility of serving the manufacturing client, especially now with AI, etc., becomes less feasible. And so it makes a lot of sense that there is this link between the liberalization in the services sector and the productivity in the downstream manufacturing sector. So the first reason why these two, digitalization and productivity, is important is digitalization and policy reform is important is productivity. The second is the impact that they have on jobs and skills. Now, for this part, we jump to a different country, and our deep dive here is going to be in Indonesia. We're looking at actually micro-level data on workers. We both discovered that if we look at different type of employment, divided the employment into four main groups: non-digital informal, non-digital formal, digital informal, and digital formal, you see that by far it's the digital formal jobs that are the ones where the educational levels of employees is higher, with a 34% of employees having a diploma of university or higher. And where are these jobs found? Precisely in the services sector. So finance, professional, ICT, these are the sectors where the people that work have the highest educational attainment. And this fact is consequential also because in these sectors, first of all, digital jobs have a wage premium over non-digital jobs, both in formal and in informal employment. This is what you see on the left-hand side variable, up to 25% higher wages for the digital jobs and the non-digital jobs. And what you can see on the left-hand side chart instead, also the increase in the wages by years worked at the firm is actually steeper for the digital jobs than for the non-digital jobs. So we have digital jobs which are paying more, that whose profile of wage over tenure is steeper, and they are concentrated in the services sector. So obviously, as the services sector will expand, the need for more skills is something that these countries will all face. And the question might be which type of skills. And here, while we don't have in this particular report a very statistical analysis, we sat down with representatives of the BPO sector in the Philippines. And we asked this question, which I found intriguing. What types of skill do you look for when you recruit, and how is this evolving with the change in technology? And what they said was this. Let me read you. The pipeline for talent is narrow, especially when it comes to soft skills. And as technology becomes more sophisticated, critical thinking and creativity will matter even more in how we serve our client. If the Philippines aim to produce even stronger talent, education policies will need to emphasize both maths and the arts, not just at the basic level, but all the way through college. So it's not perhaps surprising that with the development of new technologies, the AI, artificial intelligence, and so on and so forth, critical thinking becomes a key aspect in the skills that recruiters are looking for. What's maybe less evident from, but we got in the answer from this expert, was that just studying STEM might not be enough, and maybe engineers might need to study more arts as well to have a more well-rounded education as human beings, and so then being able to be more critical thinkers. So this is as for skills and jobs can be affected by these digitalization and reforms. And lastly, access. So, of course, this is now the other branch. We are not now talking about enhanced opportunities. We're talking about enhanced capacities. In the report, we go at length on this. So we show that digital technologies and reform can help both the access and the quality in education, for instance. There is a big series of experiments on how the use of digital technologies like remote instruction, computer assisted learning, use of digital books can actually improve the performance of students in standardized tests. We have a fascinating case on health, where the integrated care delivery in Henan province, China, through the heavy use of digital technologies, is able to both improve on health outcome, on health access, and on the satisfaction actually of the patients in interacting with the health system. And last but not least, of course, digital technologies can help increase access to finance, right? Here, the data are from the FinTech database of the World Bank. As you can see, most countries in the region between 2014 and 2021 see dramatic increase in the adults who made or received digital payments. Of course, some of these examples are well known, China, Thailand, Malaysia, etc. But also smaller countries have done some improvements, and this is actually beautiful to see. And in particular, for instance, we also sat down with an investor in the banking sector in Cambodia. And so our third story is to do with banking in Cambodia. And so we asked to this investor in one of the largest commercial banks in Cambodia, what role has technology played in your operations? And the answer was also fairly interesting. So the low adoption of digital financial services was due to low level of digital infrastructure and high cost of traditional digital finance products like debit cards and point of sales terminals. There was also a general lack of trust in the banking system that extended to digital finance products, which were harder for people to understand. Therefore, recognizing this gap, our international experience management developed a QR code-based payment. The technology was already popular in other Asian countries, and Cambodia quickly embraced innovation, partly because of its youth and tech-savvy population. We also saw that the level of digital transactions skyrocketed during COVID, of course, accelerating the shift that had already begun. And in talking to this investor, the interesting aspect was that this international experience management team was key for them to be able to develop this particular innovation. So let me now go back to a small recap of what we saw so far so that you're really well trained in our services Unbound report. We spoke about the drivers, so digital technology and policy reforms that are actually shaping the services sector in the region. And we spoke about the reasons why these are very important developments. So on one side, we had the increase in productivity and also the change in the demand for skills. And on the other side, the improvement in access, especially in health and education, which could actually obviously bring about an increase in the supply of skills. So now what is left, the third and last part of our report has to do with what needs to be done. So what are the policies that could actually spur this virtuous cycle between enhanced economic opportunities and enhanced human capacities that can power the development in the region in the decades to come? And so here we are proposing three main type of reforms to harness this opportunity. The first is striking the balance between liberalization and regulation. The second is to close the skill and infrastructure gaps. And the third is international cooperation, ever so important since the new world that is starting today. So let me delve into each of these areas with a little bit of calm now. So the liberalization and regulation, the unfinished business of service trade liberalization. So I showed you before that in the region, we did see some partial policy reform in services between 2008 and 2016. Now, this is the last vintage of the same indicator, that is to say, a summary of the restrictiveness in the regime in trading services for the region. And as you can see here, this is plotted against the GDP per capita, so the level of development. The countries for which this indicator is available in the region, the developing region, are in red. And as you can see, Thailand, Indonesia, Philippines, China, Malaysia, Vietnam, they all display a level of restrictiveness in service trade. Remember, higher is more restrictive, lower is more liberalized. That is higher than what it would be effectively determined by their level of development, which is the green line. So there is a sense in which service trade liberalization is definitely unfinished business. A lot of things can be done in terms of reducing, say, the maximum amount of capital for M&As or greenfield investment. The streamlining of licensing, for instance, is another big thing. Some countries impose limits on the nationalities of the people that sit on the board of the company. So there are a lot of different regulations that can actually impede the country to fully harness the possibilities from services trade. And here is the only place where I have something on Japan. So we did something special for this report, which was basically trying and see how two main regional initiatives of liberalization, which are the RCEP and the CPTPP, were actually in terms of services. Now, this is not an easy chart to understand. So let me follow you through, guide you through this chart. So for two examples of financial services and communication, what we are reporting for each of the countries, so the countries to the left of each chart are the countries where who are only signatories of the RCEP, so where there is a blue and a green bar. All the other countries in the middle are the ones that are both signatories of CPTPP and RCEP, and the ones on the right are the ones who are only signatories of the CPTPP. In all the charts, the blue bars are the applied level of restrictions. So basically, the idea is that if you see a green bar or a red bar, which is above the blue bar, which is the case for most of the country in both sectors, then this means that the final level of commitment under RCEP and CPTPP in terms of liberalization of these sectors is still a regime which is more restrictive than the currently applied regime. Now, this doesn't mean that these two initiatives are not bringing anything on the table in terms of service trade liberalization, because also locking in the level of regime not to be more restrictive than a certain ceiling is something that is valuable, as we know from economic literature. But certainly, we can say that from this analysis, it doesn't seem that RCEP and CPTPP will be initiatives that will bring about a huge liberalization in services trade on top of what is the currently applied regime in most of the countries. There are some exceptions, as you can see, but not the majority of the country. So still this unfinished business of liberalization, which in the case of service trade, and I'll come here with the last of our stories, can be very tricky. And why? So we bring in some experts on logistics in Indonesia, which is a country which actually did implement some interesting reforms in the sector of logistics. And there, what we discovered is that federal level reforms sometimes are not enough. So in particular, this expert was telling us, despite the reforms, regulatory oversight of the logistic industry continues to be highly fragmented. Freight forwarding services, maritime transport services, air transport services, rail transport services, and freight transport are under the Ministry of Transport, while warehousing and storage are under the Ministry of Trade. Custom is under the Ministry of Finance, which is typical. An e-commerce logistic company, courier and express logistics are under the Ministry of Information and Telecommunication, which means that if a big company, say a multinational company that operates in all of these domains, tries to enter or do business in Indonesia, all of a sudden has a lot of counterparts that they need to speak with, which makes it less easy to do. And also another aspect that we were explained is that even if at the federal level there might be a reform, then maybe different subnational units, say provinces or different prefectures, etc., can have different rules. And also this fragmentation can effectively impede the full harnessing of the federal reforms. And so this was an interesting point that sometimes even when things on paper looks good, then if you go below the level of what happens in the federal government, you need a lot of changes to be able to fully harness these reforms. So this is the first level. The second level is the idea of skills and infrastructure gaps. So in terms of skills, let me show you here a couple of charts. Maybe easier to start from the right-hand charts. So in terms of digital skills, and here also we report Japan, Singapore, and Korea as three, point of reference for the developing countries in the region. You see that the percentage of workers describing using a spreadsheet is dramatically different in countries like Cambodia, Vietnam, and Thailand if compared with Korea, Japan, or Singapore. So there is certainly a gap, as well as if we adopt the methodology of the International Labour Organization on the left-hand side, we find that firms are filling positions with individuals who are mostly underqualified for their job. What they do is to look at whether, say, a high school diploma, a person with a high school diploma is employed in a managerial position, which would require perhaps a higher qualification, or, and that would be a case of underqualification. If somebody with a tertiary degree is working as a machine operator, that would be some example of overqualification. As you can see, in most of the countries of the region, and especially the smallest ones, so Laos, Cambodia, Timor-Leste, have a much bigger share of undereducated labor force compared to the occupations in which these people work than the overeducated. We can discuss more this if you're interested, but there are reasons why, for instance, Vietnam is different, etc. So in terms of education, of course, so there is a lot to do. In terms of infrastructure gap as well, you can see how the percentage of people using the internet exploded, and there was a lot of improvement in the access to broadband fixed line. But as you'll see in the report, this is very unequal across countries. So that's also something that, of course, needs to be fixed. Finally, in terms of cooperation, we just give a couple of examples. Of course, international cooperation is a very interesting and important topic nowadays. But an area where this cooperation is particularly important in terms of the impact for digital technologies is, of course, the cross-border data flows. And so here you can see how the countries in the region have a very heterogeneous approach in terms of the regulatory framework on international data flows, which could hamper the possibility of actually harnessing all the advantages of digital technologies. And perhaps ASEAN would be an interesting venue where these things could be discussed and maybe found a greater convergence between countries. And so as the opposite, as one example of a very virtuous international cooperation in services sector, we bring in the commitment for the reduction in the emission in international shipping, which is actually a big example which we hope other industries might follow in terms of commitment to reaching zero emission by 2050. So to conclude, and somehow also to go back to our one of the key takeaway that we want you to get from this report, we like to think about this report as introducing this interesting interplay between opportunities, economic opportunities, and human capacities. And so what we want to say is that from a situation of relatively underdevelopment, as you see the red box in our chart here, when policies could actually be such that basically you really push for the increasing capacities in a country, but without paying too much attention to the opportunities that should go with those capacities. And so then you might end up in a situation where you have high human capacities with not enough economic opportunities that can be exploited by these capacities. And so that is what can conduce to potential underutilization. A key example would be youth unemployment, for instance. On the other hand, you could have a situation where a country is actually pushing a lot for the development of economic opportunities, but is not investing enough in the creation of the human capacities that are needed to exploit those opportunities, right? And there is where you could find essentially potential shortages of, say, high-skilled labor. So only the virtuous interplay of policies that are actually both developing economic opportunities and human capacities are the ones that would bring the countries to give on a path for virtuous development. In order to try to put countries on this diagrammatic framework, and I land with this, we did something very, very special, and we went back in time, partly because we wanted only to have some sort of a description and not pointing any finger. So here, what we are doing is to bring you a lot of countries in the world in an opportunity capacity space where basically we are measuring opportunities with the skilled labor in value-added export. And this is a measure of external demand of opportunities, so not internal, that's a little bit more exogenous. And then the tertiary enrollment average in the same years on the vertical axis. And then you can see that, of course, Japan, Hong Kong, Australia, New Zealand are countries where high opportunities and high capacity, at least in terms of the difference with the median. So the blue lines are the mean of the sample, both on the x-axis and the y-axis. But then you have other countries where basically you have an excess of capacities over opportunities, and other countries where you have an excess of opportunities over capacity. And so really, the way toward the future, which we advocate for all the countries, is to try to move the things together and not just on one dimension. So I think I am now done, and I hope that it's a really difficult Koiki for me because I don't see the participants, so I don't know if it was clear or not, but I thank you very much for your attention, and I think I'm within the time, and now I'm very happy and open to take questions or to answer to
Thank
any
you.
complaint.
Thank you very much, Alessandro, to present the main point of the report. Really interesting. And then certainly we do want to seek an opportunity to bring you to Tokyo in person so that you might be able to have more interactive live conversation with the audience in Japan. But let me read the question that we received in advance, and also one question that just came in before the start of the seminar. So, perhaps some of them you have already sort of addressed during your presentation, but let me read anyway so that you can elaborate a bit more on those points. The first one, the roles played by the technologies and digital industries must be important in the region. In this connection, how do you see the differences between larger countries and smaller countries in the region? And what would be the most important things for the leaders in the smaller countries to consider and take actions? Let me add, actually, in addition to smaller countries, perhaps if you can mention about the Pacific island countries also in specific. Thank you.
Yes. Very good. Thank you very much for the question. But you saw that every time we had a chart, smaller countries were a little bit less well placed than larger countries, be it for the divide in terms of access, be it for this gradient of access in education, be it for the access to finance, right? So in all those cases, or the share of undereducated labor force, right? In all of these dimensions, we found that the smaller countries in the region were less well placed than the larger countries. Now, I really like to think about one case back in 50 years ago, which is Singapore. Singapore was not a big country. Singapore didn't have access to natural resources. Singapore didn't have was in a situation very close to many of the smaller countries in the region in these days. And so it's a super interesting, I think, to go back to the experience of Singapore and see which were the key driver of the success story that Singapore obviously is, right? And so as you read the story, obviously a lot of things, but as you read the story, certainly two aspects to me comes to mind as very important. The first is an absolute thirst for knowledge and every potential knowledge source. If you read Singapore in the 60s and the 70s, they were going around the world in any possibilities, right, to learn from the frontier, right, in terms of management techniques, in terms of engineering abilities, right? So they were really trying to learn from everyone. And the second, a huge emphasis on education. I was really, really surprised when I read that the two most paid categories in the Singapores of the 60s and the 70s were engineers and teachers, because there was a clear awareness that the future of the nation was in the schools, in the education system, right, in bringing up the youth. And so I think that this is a very provocative type of experience for also the smaller countries in the region. As for the Pacific, although in fact we do not have a lot, we do have an interesting annex specifically on the Pacific Island, because the Service Trade Restrictiveness Index is available also for them. And there we precisely make the point that connectivity, right, and is so important for these countries, right? And so the importance in not putting artificial barriers to what can provide that connectivity that is so relevant and vital for these economies is definitely something that is worth considering very, very carefully. And so in addition to these points on Singapore, I would say that perhaps for the Pacific, further attention to the liberalization of service trade without necessarily trying to limit what for instance foreign company can bring in terms of more efficient services, lower prices, etc., could be an interesting venue of reflection.
Great, thank you. Thank you very much. So next question, let me read a second question. The slide 34, closing the infrastructure gap, shows the EAP is not necessarily the first runner among the regions in terms of the use of the internet by individuals. What should be done to accelerate this to catch up and go beyond the other regions. It's a bit pity considering of EAP's economic growth and the level of poverty reduction in the past years.
Well, of course, then that chart is obviously an average, right? So obviously, if you look at the single countries, their experience are very divergent, as we saw before, and there are many countries in the region which are obviously at the forefront of the use of digital technology and access in the world. But then you have also other countries which are lagging behind significantly, and so then of course that's only an average, right? If I eat 2 chicken and you don't eat anyone, we eat 1 chicken each, right? So that's always a problem of aggregate statistics. But of course, the point is well taken, and this should be a priority. And there we think that it's an interesting question for countries to face is what is the right mix of public and private sector in providing, the investment, for instance, that are needed to bring in the bigger connectivity in terms of the fixed broadband, right? Because, of course, that is what is needed if you want to have some sort of heavier lifting activities or tasks, right? It's broad telecommunication in terms of mobile broadband. It could be good for just the banking, online banking. But then if you need to do like entire delocalization or teleworking, etc., then you might need more than that. And so of course the fixed broadband. So this also brings a lot of needs for investment, and so who is the best actor, right? What are the possibilities for public-private partnerships? What are the possibilities to attract capitals from abroad? And I think that in many instances here, there is a little bit of an advantage of the region, right? Because still is a region that is growing very much, is a region that exert a lot of interest for many investors. And so from this point of view, the future is bright because compared to other areas of the world, my feeling is that there is a desire for many investors in developed countries to know more about these developing Asia countries and to invest in them, to exploit in a certain sense, all the possibility of high growth that comparatively is higher than in many other regions of the world. And so basically, perhaps the policies that are needed to be able to capture this potential openness of international investors also to provide the capital that are needed for the investment that are needed for the infrastructure, right? That could be a very interesting venue where these countries could develop further, hopefully also helped by the work of our institution.
Thank you for your responses. The third question, the question that came in just before the start of the presentation, question is this. The report mentioned that the services sector is less carbon intensive than agriculture and manufacturing. However, how does increasing digitalization, AI adoption, and reliance on global supply chains influence the true carbon footprint of services? Any
So
comments?
this is a fantastic question. I would imagine that the person is an academic or a very big expert of this topic, which I am not, and that is where essentially the book was really not written by me, but by a big set of people. So I do believe that we try to present when we have that picture both the direct and indirect emission. But the indirect emissions, of course, are the ones that comes in through global value chains. These are also data that are referring to 2022, if I'm correct, which is, essentially pre-AI, right? So, of course, since when the ChatGPT was made public, and there is this now frenzy and rush to AI and the data center, and these are extremely energy intensive activities. And the fact that, of course, the countries in the region are trying, rightly so, to capture a lot of these businesses. This might actually change slightly the type of picture I showed in terms of the green footprint like of this services activity. But this is where it's exciting to be a researcher in this period, because of course these are all open questions which only new data which are not yet in a sense available will allow to fully answer. So stay tuned, and if this person wants to directly write to me, it's easy to find me online, so I'm very happy to interact more and maybe even collaborate on this type of questions if there is an interest.
Great, thank you. Actually, the question came from the student.
Perfect.
Sureya Asha Sudakaran-san. Thank you very much
then
for your question.
Sureya, we wait for your email, and we wait to collaborate on this interesting question.
Great, thank you. So before the closing, since you have already responded to the question that we received in a very efficient manner, before the closing, Alessandra, please give us a very final closing remarks so that we can close the session. Thank you.
So, sure. So again, what we try to point towards in this report is that although clearly East Asia has always been thriving with a manufacturing export-led growth model, most of these countries are now at the stage where they want to make the next step. And the next step, which means, if you want also, you could say in this term, escaping the middle income trap. And so we point toward the fact that an adequate appreciation of the service sector could actually be one of the drivers of this further development, precisely because services sector are not anymore the ones that used to be 30 years ago. And one of the reasons is the powerful technological changes that are giving to this sector new perspective. And so therefore, we think that both businesses and policymakers should pay attention to this sector in a way that not always is done.
Great, thank you very much. We had a pleasure of having Alessandro Barattieri, who is a senior economist in the Office of the Chief Economist for East Asia and the Pacific region of the World Bank, presenting the very new report titled Services Unbound, Digital Technology and Policy Reform in East Asia and Pacific. Alessandro, thank you very much for your time and presenting.
Of course, the last word is I just encourage you to read the report, which also has one of the best cover of the World Bank report of 2024. So, don't let it slip your eyes. Thank you very much.
Thank you very much. We would definitely continue organizing these online seminars to feature the latest report put together by the World Bank, presented by the authors of the report. So please do stay tuned, and then see you next time. Thank you very much.
Bye-bye.
Bye.
Can I go? Goodbye. Thank you very much.